Good morning, this is the latest market news. I am Uliana. Asian markets fell on Monday as Australia's manufacturing index and new building approvals eased in January. An industry survey released in Australia on Monday showed that the country's manufacturing index fell to 46.7 in January, from 47.6 in December. This was the third successive month that the Australia's manufacturing sector weakened as the mining investment boom fades away. Australia's new building approvals issued by the government also fell by 2.9% in December, against expectations of minus 0.3%. In China, the non-manufacturing purchasing managers index for January fell to 53.4 from 54.6 in December. Chinese markets are closed for a public holiday. Australia's ASX 200 fell 0.32%, while Nikkei 225 fell 1.76%. Whilst the Australian dollar opened the new week comfortably above its 7-day low of 0.8776, when valued against its US counterparts, the higher yielding is still half a cent lower than where it left on Friday, opening this morning at a rate of 0.8749. With the move lower in line with a significant sell-off witnessed across emerging markets, the Federal Reserve's decision to cut stimulus by a further $10 billion per month is already having a notable impact on global capital flows, favoring the safest and deepest pockets. In what's shaping up as a weak, clustered week of economic releases, investors aren't expecting any change for the Reserve Bank of Australia when they meet tomorrow to discuss monetary policy settings. The first trading day of February brings an array of new survey numbers for the manufacturing sectors throughout Europe and in the US. US ISM Manufacturing Index 15 GMT. Both the ISM index and its competitor, the market US Manufacturing PMI, have been at levels lately that align with a healthy rate of growth. But the weak income data for December raises the stakes a bit for today's release. Keep in mind, too, that the previously released flash estimate for market PMI's January number hinted at a slower pace of growth for this cyclically sensitive sector at the start of 2014. The consensus forecast sees the ISM number dropping to 56 from 57 in December. If so, that's a mild setback and not terribly worrisome, given the high margin of comfort over the neutral 50 mark. It was the latest market news provided by ICO FX. Goodbye.